Hey, morning guys, Andy here. Hope you're well. So in this video, I want to quickly show you the difference between trading diagonal lines and trading horizontal lines. So very often I kind of see, we get these kind of patterns here, um, and we start to kind of draw these diagonal lines, right? And then sometimes we see something that's a little bit, what looks a little bit more obvious, and we get this triangle pattern and we draw diagonal lines. Now, when it comes to kind of textbook theory here, most people will say to you, well, if it breaks to the downside, we should sell it. And if it breaks to the upside, we should buy it. Okay. And here's the problem. Here's what the problem is. When a market is forming this type of pattern, there's no real set way of identifying where the correct diagonal line is, because it's happened to me many times where you think it's this and then suddenly it does this, you buy it, the market comes back in and is still forming its triangle, and actually you realize that the triangle was actually here. Yeah, I'm sure if you've been trading long enough, you might recognize this problem. Whereas when you've got a horizontal level, yes, you do get fake breaks, and that's kind of a different story in itself. But everybody can kind of see that this is actually a real break. Okay, if it closes above this line. So, how do you get around this? Well, my answer is simple. You need to use the higher time frames. So if you see this type of pattern on a lower time frame, you need to go and look at the higher time frames to understand if this is making sense or not, and how you might be able to take advantage of it. But it's always going to be easier to trade horizontal levels, and it's always going to be more consistent. So let me just go over and show you a current example right now that's happening in cable. So I've got a 4-hour chart here, and you can see that I've connected some points here where it's indicating a symmetrical triangle right there. And you can see here, it looks like it's broken it. But it could easily, we could easily then say, well, hold on a minute. Is this really the right triangle? So what if the real line is there on the top side and right there? And what if the real line ends up being something more like here, right? And then the market's, you've just sold it basically, and then now you're kind of stuck in a trade that, is now going to be relying on luck. What if it's going to go a little bit higher? So, as I just said, why don't we go and look at this example on a higher time frame? So if we've got a 4-hour chart triangle, we may as well look at the daily chart. And here's what I've got on the daily chart. I've got basically a support line, and you can see that this is reactive. This line is reactive on both resistance and support. And so the first push down is going to be met with resistance or support, support around here, which is a key round number 130. So if we go back to this triangle, if you played this as the textbook kind of trade, your target is going to be approximately, let's say somewhere down here, around 126. Let's go back to that daily chart. over here. Now 126 is kind of heading back down towards this key level that I've identified here in green, which basically is a really good responsive zone. And so therefore the market could make its way down here, right? So it could actually make its way down here. But the problem is that you're selling at a point where you've got this big level that we haven't broken through. So you could easily see the potential for a fake break, because the last 1, 2, 3 touches on a higher time frame, and remember, higher time frames control the smaller time frames, it has bounced higher. The buyers have taken control. So it's very, very possible you could end up taking a trade that pushes down a little bit in your favor. So where's 130? Let me just identify. 130 is here. Right there, approximately. So the market could push down a little bit there, which it's starting to do, and you are jumping in now because you think the triangle is broken, and then suddenly this happens. Now, I'm not saying that's going to happen, but I'm just making you aware that that could happen, okay? And you're looking at this chart right now. It looks like it's going to break lower, and it might do. But what is the smartest thing to do? Is it to go in and jump in right now? Well, in my opinion, no, because when you are on the left-hand side of this supporting line, you should be looking at the market going higher or being a buyer. And only when the market goes on the right-hand side of this line should you be looking to be a seller. Now, if you're going to be looking to sell when you're on this side of the market, you better be getting a good price. In other words, you better be getting a high price, not chasing the market, running straight into a brick wall. Okay, guys, I hope that helps, guys. Let me know in the comments if you've got any questions. Have a great day. Good trading to you all, and I'll catch you again with another update. Take care.